Hello, folks. This is Morgan Hill with Hill & Hill Financial with an educational economic update for October 2016. In this month's video, we'll discuss some of the events that influenced markets in September and help you understand what they could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. The third quarter ended in volatility for U.S. financial markets. After a sleepy summer with historically low volatility, markets became more turbulent in September. Now let's talk about some of the headlines that drove market movements last month. The Federal Reserve was again the source of much speculation. The central bank met in September to vote on interest rate policy and decided not to raise interest rates again. The Fed is in a tough spot right now because it needs to bring rates higher to avoid overheating the economy. However, central bankers also need to be careful not to raise rates too soon or too fast, or they could risk hurting the economic recovery. The economic data right now looks moderately good, but the Fed knows that there are risks on the horizon. So what comes next? It's not likely that the Fed will raise rates at the November meeting, so that makes the December meeting very important. Wall Street thinks the odds of higher interest rates after December are well over 60%. Interest rates have complex effects on the economy, such as corporate profits, markets, consumer finances, all of which is why investors care about what's going on with rates. Overall, we can expect the Federal Reserve to be a source of market volatility through the end of the year. The third release of Q2 economic growth data shows that the economy grew at 1.4% in the second quarter. While the growth is below trend, economists expect to see stronger growth return in the third quarter. Two unofficial projections of gross domestic product show that the economy may have grown 2.2% in Q3. However, forecasts have come down steadily in the recent weeks, and it is possible that the official growth numbers could be disappointing. What can investors expect in the coming weeks? Volatility and more volatility. Markets are grappling with a lot of uncertainty now. We also know that the Federal Reserve wants to raise interest rates this year. On top of that are concerns about oil prices and Britain's exit from the European Union. Overall, we can expect markets to remain uncertain until these important questions are resolved. As always, we'll keep you informed. That's it for this month's Educational Economic Update. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please feel free to give us a call and we'd be happy to talk with you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Once again, this is Morgan Hill with Hill & Hill Financial, signing off for the month of October 2016.